Welcome to Investors Insights. Our topic today, honeymoon with the Fed. I am joined by my distinguished colleagues, Trey Booth and Bobby Norman, and I thoroughly enjoy the Monday morning meetings all the time. I can't think of a single time, even when we got in heated discussions and debates, when I didn't thoroughly enjoy it. Good morning, gentlemen. It's good to have you on the screen. And we've got an interesting topic today, honeymoon with the Fed. Here we are in the month of June. A lot of weddings take place in June. And we've had an event take place in the markets that kind of is symbolic of a wedding and honeymoon. So, Bobby, when people are looking at getting married, everything looks good. So with that, talk a little bit about corporate earnings and momentum in the market. And then also, I think you brought up today, did a phenomenal job. Midterm elections can be volatile. So going into the changes at the Fed that have occurred, talk about what they're walking into.
Yeah, so with the RAND moving to the rear view and the first Federal Reserve meeting under Kevin Warsh over, investors will likely start to focus on the midterm elections in November. So first, as you can see in this first chart here, we usually see volatility in the S&P 500 spike around this time of the year in midterm election years. However, this year, as you can see in the red dotted line here, the S&P 500 has defied the odds and has performed much better than it has compared to history. And so investments in artificial intelligence, strong corporate earnings continue to drive the market higher. So we'll see if the market can continue to outperform historical performance. And the second chart I want to show goes over how the S&P 500 performs with different makeups of Congress. So our viewers know that we only care about politics and how it impacts the market. But this chart shows that markets have historically performed better when Congress is divided. And this is something to keep in mind as the midterm elections start to become more of a focus in the upcoming weeks and months. And so we look forward to continuing our analysis on how the midterms will impact the markets. But for now, as shown in the first chart, the markets have been more focused on strong corporate earnings, which has led to better performance than what history has shown. So far, so good, but we're definitely looking out for midterms.
Oh, there's no doubt about that. So, and I thought that was great insight on your part because we got changes occurring at the Fed. You've already talked about Kevin Warsh as our new Fed chairman. And Trey, you went into some real detail about changes that Warsh is getting ready to make or has already started making in the Fed. I think it's ironic that here we are on this day, and out of respect and honor, we mentioned Alan Greenspan, who was the second longest Fed chair person in the history of this country. He was chairman of the Fed while a large portion of my career under 4 presidents. And today, at the age of 100, they announced that he passed away. And there's so much that can be learned just studying history of what he dealt with. He came in 1987, and in October of 87, yours truly sitting at his desk, watched a 22% drop in the market, and the market crash of 87 took place, and he handled and maneuvered us through a lot of things. So that said, talk to us about Kevin Warsh, our new Fed chairman, as he starts his term.
Yeah, thanks, Greg. We talked about this last Monday, how it wasn't the action of the Fed, whether or not they raised rates or cut rates we were watching. It was how much change the new Fed chairman, Kevin Warsh, projected in the Fed. There's been a lot of talk before he was in the seat around all the white papers and a lot of his opinions around changes that needed to happen to the Fed. But it's a lot easier to say that from the outside. How much change would he actually try and implement from the inside? And right off the top, the biggest change was a cut in the speaking, the amount of talking. The Fed statement that Kevin Warsh gave was around 130 words, which is well less than half of the average 300 words that Jerome Powell would speak. And so, and kind of an homage, the last Fed chairman to speak that briefly was Alan Greenspan, who sadly, as Greg mentioned, passed away today. I think Alan was a man of few words, and the words that he gave out were purposely confusing. And I think the goal of that is the same goal as Kevin Warsh, is that as Fed chairman, Kevin doesn't believe that the Fed statements should drive the market. It's the markets should drive Fed statements. And so the length of the statements really grew around the financial crisis when Fed Chairman Bernanke at that time felt it was his duty, and he was probably correct, to guide markets through the crisis by having a calming voice and being much longer winded and verbose in terms of what they projected out, where they wanted markets to go. We're not in a crisis anymore, and so it's time to bring that back and let Kevin Warsh has a strong belief that the markets should drive Fed speak, not Fed speak drive markets. I also announced 5 committees within the Fed to review changes in things of as simple as the communications, which we talked about, but as complex as the balance sheet. So there will be changes made, but it's good that he is announcing a committee to review these changes instead of just there was a risk or a fear around Wall Street that he would come in and just flip over the apple cart and say, I'm in charge now. Here's what I'm going to do. That wasn't a risk we shared because he is just one member, and it's a lot harder to change things for an institution that's been around for 100+ years. You can't just go in and flip everything over, and so he's going to have to bring people along and explain it. So this is a good time for him to be trying this because we don't expect Fed rates to change anytime soon. The inflation is higher than we would like. Unemployment is in a good position, so the Fed likely can't cut rates. We'd have to see inflation remain sticky after we see, now that we've seen oil prices come back down. It's unlikely inflation will remain as sticky, and so he's got a good window where no action is necessary to kind of get his bearing. But to Greg's point, though, back in 1987, Alan Greenspan, he didn't get to choose when the honeymoon ended. The market did.
True.
That 87 market crash. So I'm not sure if Kevin Warsh gets to choose when his honeymoon ends. To Bobby's point, the midterm election is coming fast. That honeymoon may end on his own, outside of his choosing. And so we'll keep an eye on that, and how he reacts will definitely be very informative.
Yeah, well, in starting the relationship, he's come into a good situation with earnings and momentum, and so far history is not repeating itself. So both of you did a great job this morning in our committee debates and discussions, and I thought it was very insightful. And folks, I know you really appreciate what Bobby and Trey said this morning. You need to know on our social media, we continue to share these thoughts as well. LinkedIn, Twitter, Instagram, Facebook, our podcast, YouTube. We've added to the list ongoing just to keep you informed. And I also just need to say this. We also really appreciate the way some of you have forwarded it to colleagues and friends and family, whether it's our vlog or it's also on social media. That's opened up doors for us. It's helped us form new relationships, and we can't thank you enough for that. That's the greatest compliment that you can pay us. So thanks so much for that, and we hope that you have a great week here in June. We're almost finished with the month of June and halfway through the 2026 year. And so what we've shared with you today is very important in relation to what could take place the rest of the year. We're going to keep you updated. Hope you have a great week. Talk soon.